So we have with us on stage Shri Injeti Srinivas, who belongs to the 1983 batch of the Indian Administrative Service, Odisha cadre. He retired from the service on superannuation in May 2020 after serving for nearly 37 years in various leadership roles in the Government of India and the Government of Odisha. As Union Secretary to Government of India in the Ministry of Corporate Affairs, he played a key role in the implementation of several major economic reforms carried out by the government, including in the Insolvency and Bankruptcy Code, which is considered as one of the deepest reforms undertaken in the country that has had a positive impact on the borrowing culture in the country and helped banks to effectively tackle the problem of NPAs or non-performing assets. He is currently a member of the Financial Stability and Development Council, FSDC, and the subcommittee formed under it. His domain specialization areas include, among others, corporate law, industrial policy, foreign direct investment, development financing, and MSME development. Welcome, to the event, Mr. Shri Srinivas, and we can have you for the keynote address, sir, please.
A very good evening to all of you. At the outset, I would like to thank the organizers of today's event for giving me this opportunity to interact with all of you. Just a few minutes before this event, this particular session started, I had an occasion to chat with some of your colleagues and could see the sort of energy and could see that our young entrepreneurs are really rearing up to grab any opportunity, and it is clearly visible. 5 years back, when the startup initiative was taken, it appeared more like a slogan, I would say. But in last 5 to 6 years, the amount of growth that has been in this sector, it has been really very magical, in the sense that in a short span, from nowhere, India has emerged as one of the front runners, and a lot of developed countries are also looking very curiously at India, what's happening in this country. I think now it's no more undercurrents. It is clearly visible that the whole entrepreneurship culture in a way has changed. If you look at the traditional entrepreneurship, it was more of big leading business families, and a few of them, and they were dominating the whole landscape, the business landscape. If you look at the position now, it's totally different. So you have people, with no background, with no, financial background also. Every day you find that a new, entrepreneur is scaling new heights. How has this decentralization taken place? If you look at this trend, everywhere, the trend is now that things are getting decentralized. You're talking about finance, you talk about decentralized finance. In the earlier, whatever, you had landmark points or watershed points of development, whether it's the first revolution or second revolution, they were all on a centralized model. There was something which changed the whole, world, opened new vistas, but it was all centralized. So when you had the industrial revolution, then you had giant companies coming up, etc. And then it is when the IT revolution took place, things started changing a little bit. But now when we talk about the fourth revolution, the whole thing has taken a different dimension. Now from centralization, there is a decentralization. And this is not peculiar to any one area. It is happening across all areas. So I think it's basically earlier capital was a big constraint. If you had to set up a business enterprise, you needed capital. Either you need your own capital or somebody has to lend you capital. Otherwise you can't do it. But now ideas are capital. If you have a fantastic idea, capital is chasing you. Earlier this was not there. So there is something which is happening, and I think many things are going in our favor. Why it's happening, in India? Firstly, we have the demographic advantage. We have a very young population compared to developed countries where the population is aging. So there are these millennials. They are a different set altogether. Their way of thinking, their risk appetite is very different. So you have this. We have also been very, very fortunate that the mobile telephony, etc., the way it sort of has grown and reached every nook and corner, and today you have almost the entire population covered by mobile and internet penetration. I remember way back in 1999, it's just anecdotal, that when I was the director Foreign Investment Promotion Board, at that time, our FDI was opening up, post 1991, our FDI, etc., was opening up. And Nokia was the leading mobile manufacturer those days. And Nokia used to, we had a provision of test marketing. So before you set up a manufacturing facility, you take one year test marketing approval, and by that you can market. So what happened is that during my 4-5 year tenure, when second time or third time the Nokia India head would come and say that again we need, I said, this is very funny, why are you not setting up your manufacturing unit? That is when he said that the demand has not picked up. We don't have adequate demand to be able to set up a facility, and that is when the revenue sharing model was done by the then government, and explosive growth was there. What we had, say 50 million subscribers or something over a period of time, every month, tens of millions were adding up. And today, you can see, that means one strong policy intervention or one, innovation, it can change the entire thing. So today, it's a very ordinary thing, we don't realize. But if you look back, in those days, I still remember in, I think, what was it, early 90s maybe, a Motorola telephone, 16 or 18 rupees per minute local. I mean, it was like, it was something so precious, and we were bleeding, but still, you want a mobile phone, so you would keep it and all. Today, it costs nothing. So this is the advantage of technology, and for this type of innovative mindset, and for this sort of risk-taking, approach, you need an entire ecosystem. So you people alone can go up to a point, but if you do not have a supportive ecosystem, that becomes very difficult. So I think looking at the way we have been doing in fintech, startup, the type of projections which have been there, the type of venture capital which is flowing into the country, it's increased manyfold. I mean, today I find that in the last quarter about 10 billion, that's what I read, 10 billion was fed into this startup ecosystem. So the type of money we are able to attract from global investors, from local investors, this is a clear evidence of what's the potential. Coming to insurance, I feel in the financial sector, this sits a little lower in priorities in a typical, mindset of a person. Traditionally, whatever security we have been thinking is that, you have gold or something. That's how gold has been a very traditional source of security. And no wonder we have 30,000 tons of household gold stock in this country. And so you have gold, or you build a house, and that's your safety. And a person may want to invest in stocks, invest in anything else, but spending money on insurance, they feel it's it is avoidable, what's there, and anyway if something has to happen, it's going to happen, and even if something is going to happen, the claims will never be settled. So I mean, it is something anyway not going to come your way. There will be some fine print which will prevent you. Now all that is changing because of competition, because of technology. Everything is so easy. It's really surprising. I mean, I myself have experienced very recently, and whether I should say I fell prey to it or it's good that I got into the mainstream, I can't say. But I was just, I anyway pay my rent. But I was hearing about this cred chap, and what is this cred? And I said, it's very funny. Anyway, I pay my credit card bill, so why should I pay it through this platform? Somehow I saw, then they said, you pay it through this platform, then you get 1 month insurance, for 1 lakh or something. So I said, chalo, theek hai, free mein mil raha hai. Anyway, I pay, so I will use it. And for the last 6 months, at least till now, I have been paying it through that platform and not directly paying it, because I get 30 to 40 days credit. I'm, doing and getting some credit points, which I don't understand what it does, but I'm getting that also. So I'm a millionaire as far as credit points are concerned, yet to see what I can do with that. So I think these are things which are showing how the future will unfold. We at the IFSC are looking at the entire fintech as a very, very, high priority. IFSC, I really do not know how many of you know about it beyond a general awareness. It is basically a very powerful concept, and it's not a new concept, it's been there for a while, but it got implemented in its entirety very recently, maybe less than 2 years back, when we established a unified financial regulator for an international financial services center. So in a country like India, where you still have a lot of capital account convertibility, you have restrictions. That is where an international financial services center becomes something unique. Because in a country which has full capital account convertibility, the whole country is an international financial center. There's nothing like a separate enclave. But here you don't have full capital account convertibility. So there is a zone, like a special economic zone, you have an international financial zone where you have this full capital account convertibility. And the domestic regulations do not apply. You have a separate regulator, and the regulator has to notify, separate regulations for this financial jurisdiction. So it's a distinct financial jurisdiction. So what happens is, if you set up shop in the IFSC, you are like a non-resident. When you then deal with with any resident entity in domestic India, then it is like the Indian side, you are importing a service, and from this side you are exporting something to India. So that is the type of special privilege you enjoy, in the sense, if you set up a company here and you want to raise capital, you list your stock on the international exchange. Then your stock will be listed in dollar or in any other freely convertible currency. and then there is no fragmentation. So if you're going to Singapore and listing in Singapore, and then maybe it is parallelly listed, in London or somewhere else, and somebody can buy stock there and sell it here, buy it here, sell it there. Same thing can happen in IFSC. If you set up a company here and you list your stock, you have that cross listing. There is no fragmentation. You have the advantage of the whole thing being in dollar. Those sort of advantages are there, and also the FEMA restrictions. That means if you're in the domestic area, even if you're earning foreign exchange, there are some restrictions on how you can utilize that foreign exchange which you earn, your exchange earning account. But there, if you're earning foreign exchange, there is no limit on the repatriation. There are no ODI rules, overseas direct investment rules. You are maybe deemed to be in a foreign territory. So you have a different status, and so these are things which can give a lot of advantage, especially when we have this huge Indian diaspora. I think we are yet to really take full advantage of this huge Indian diaspora, except for that 70 odd billion which comes annually as remittances. I think that's not a big deal. There are a huge, because they have family, relatives here. There can be a lot of financial products which can be worked out, which meet their needs. Also, for example, today the age expectancy has gone up a lot. Okay, so people say that maybe in coming 10 years people will start living for even maybe 100 years. It sounds almost impossible, but maybe all of you will have your Amrit Kals, 75 to 100, like we are having, our country is having now. And then what sort of financial products will you require? Are we catering to that age group? I mean, are we at all catering to that age group? Do they have financial inclusiveness? Do they have, even if they have money, do they have investment avenues where it meets their type of requirement? May not be. So what I'm saying is that there are unlimited opportunities. We have this demographic dividend. We have this huge, mobile and internet penetration. We have the, because of the population advantage, we have this high adoption rate for technology. Digital adoption rate is very high, among the highest there. We are very well ranked in even digital competitiveness. So there are all these things happening. And I think all these things put together give a lot of opportunity for our fintechs to do well. I read somewhere that there are about 6,000 odd fintechs, and their valuation can go up to about 160 billion from 50 billion now in next 5 years. So, which means there's a 100 billion investment opportunity. These are the sort of projections. This is the growth this sector is having. Insurance, we all know that life insurance is okay. Most of us who can afford life insurance, we do. Therefore, there is not much difference in the penetration level between India and the global average. But non-life, we are a small, minuscule part of, it's, I'm told 1% as compared to 4 plus percentage, and intensity is also very low, which means basically we need to cater to the type of risks which people are perceiving, the type of products they require. So this is where, whether it's the design of the product, whether the experience you are having when you're purchasing something online, how you are processing the claims, how you are settling the claims, this entire value chain, you can have an impact. And one of the very new things which is happening is the embedded finance. That means you may not necessarily be a financial company, But in a non-financial company, because of the subscribers you have, because they have multiple needs, you can have this a financial product also then being bundled there, like I mentioned to you, this whatever, and maybe even this initiatives like buy now and pay later, or this new initiatives. Even Tatas have come with some new initiative, and all these things, technology is being leveraged day in and day out. So while all this is very good, one thing is that you have to keep running to be where you are. So you just can't be static. It's a very dynamic industry. So it has its plus, it has its minus, because things will change very rapidly. So you can't stop. You can't say that you got the final thing. So I think this is a great opportunity, and we can, there's a lot of scope for innovative thinking. Look at the health sector. We have the India stack. We are all familiar. This was a great example of how there can be public infrastructure and private innovation. So it has been an experiment which globally people are looking at it, that how is it that India could do this Aadhaar, where 1.3 billion people are enrolled on this Aadhaar, and this UPI, which has become a super success. Now they're looking at cross-border with Singapore. Already something is happening for $1,000 or something, that cross-border transaction. The costs have come down to a fraction of what otherwise the costs are. I understand that the remittances, the percentages could be 5 to 10%. That sort of money gets lost in all sorts of charges, fees, commissions. So technology can really bring a lot of benefit. And of course, technology which brings benefit and which is responsible and which is socially relevant, environmentally relevant, that will only be sustainable. So technology which is rash and which is based on very fragile sort of marketing things may not be able to sustain themselves. So now that all of you are into this InsurTech, I think among other things, you can also look at IFSC as a possible area. We already have we have already sort of taken some measures to make it a hub. We will be the first, I think among the first regulators to have a fintech framework. So typically you have this hackathons and iSprints, we do some, and they are cohort based. So a cohort, some problems are there, one cohort will come, but you don't have a continuous thing. But once the fintech framework comes, which should come within a month, then it is continuous. That means anybody can come with a solution and then try to get into the regulatory or the innovative sandbox. So I think this is again a unique thing, that our fintech framework there, and also maybe in the Indian context, of course, the first regulator to have a fintech incentive scheme. So that means people even at proof of concept stage, etc., they want to try out something, then this fintech incentive scheme was also there. There's a fintech framework which is coming shortly. We are looking at building fintech bridges with major financial centers. So we are in dialogue with FCA in London, we are in dialogue with MAS in Singapore, that's moved quite a distance. We are in dialogue with some other Dubai and Abu Dhabi and all that. So maybe if we have this fintech bridges with 10 odd counterpart regulators, then it acts as a launch pad. So if some Indian entity wants to go, it's a referral mechanism. They'll go with a referral of one regulator, then there'll be a soft landing there. That regulator has some obligations while dealing with this case referred by us. Similarly, we will have some obligations when our partner regulator will refer a case to us. So I think there are a whole lot of opportunities. And today we are in a age where regulator and the regulated entity, they'll have to work in partnership. My personal feeling is that trust is very important. Regulation should have the rigor and regulation should be effective, but we should allow something to, there should not be inertia. We should look at things, that things are changing, and only thing is that there should be a cautious approach. When do you allow it to be made retail? So just like medicines, in pharmaceuticals, you have a trial. So there are trials, you do trials on animals, then you do trials on human beings, and then this is there, that is there, and then you say it's now safe. And you license the person to manufacture that medicine and sell that medicine. This is no different. So when you are coming out with something very innovative, then in a lab condition you try it out, either in a lab condition or in a controlled condition you try it out, and then you can sort of give them the permission. One last thing I would say is that in a way, even IFSCA is a regulatory startup, in the sense that 2 years old only. So 2 years old, and suddenly, all the big brothers, SEBI, RBI, you have all the powers of all the 4 big brothers. You have IFSCA Act and 15 more acts. You are given the powers of all those 4 under 15 different acts. So suddenly you have all this, but then you have only 250 acres. What do you do? And so we also have figured out that, this is an extraordinary opportunity. In London, 1 square mile of London is the London financial city. So 250 acres is good enough. In the financial sector, you don't need 2,500 acres or anything. So it is a sort of a breakthrough type of idea. It's a breakthrough type of idea, and we will have to play the dual role of development and regulation, because first we'll have to create the conditions that it attracts people to come and set up shop, and then develop products, and then you have to regulate how those products are marketed, how you deal with that. So all this is there. So insurance, I think credit insurance, so many types of insurance. Diaspora, I personally feel that's one area where a lot of ideas can be generated, and that could be the ideal place to do products which is meant for the Indian diaspora who are not residents. So I thought I would just share some of these ideas I had, and I don't know the format. If there is any Q&A, I can take a few questions, or thank you very much.
Hello. Yeah, any questions for sir? He just spoke of a wonderful emerging opportunity for startups and established companies looking at new ways of doing business, becoming global. Okay, so I have a question for you, sir.
Either they are fully convinced or they are not.
Yeah. So I do have a question, because my business has some exposure into the international markets. And sir, so first and foremost, you've spent a lot of time in my home state, Orissa. So and I have heard about you, so thank you so much, sir, for coming here. So the question that I have is, so I work for Manipal Cigna, which is a joint venture health insurance firm in India. And we have been, for the last 8 years of our existence in India, we have been offering global health solutions to Indian corporates. And we had that thought process, and I think most of our other peer group companies also do have, that how do we cater to the Indian diaspora, who are actually living abroad, may not be residents, permanent residents, but will eventually come back. And for all these IT companies, there are lakhs of them who are now working abroad. So one of the things that we encounter, and some of my friends from our intermediary partners would also acknowledge this, that when we look at setting up, let's say, an office in a gift city as an insurer, one of the things that we have to deal with is when we are offering a solution to an international office of an Indian company, there may be some corresponding regulation of that market. That is one. So how do we tackle that? And especially markets like, let's say, a Singapore MSA, or maybe something for US or something.
Yeah, so this is basically, there'll be one more complication also. You have the home regulator also. So suppose you are already set up shop in the domestic area, and then you set up a branch or a subsidiary here, and then you are trying to sell a product to a third country. Then there may be 3 regulators. Okay. So this is what I am saying, that regulators also have realized that a collaborative approach is a must for regulators. So not only for enforcement, even for development. So today, let us say crypto, the position today of crypto is that because there are different viewpoints emerging in different regulators, so something which is actually a global thing cannot happen if these things are there. So you need a common approach. So for these things, it is basically giving access to their market, and we giving access to our market. So these things will only have to be settled by way of collaboration and MOUs and some understanding like this between the regulators. So and in case there is a very specific thing, I would not venture off the cuff sort of solution. We will be open to examining.
Sure. And so the second part of the question was that we have a highly successful, similar peer group, entity in Dubai, the DIFC. And most of the companies in our sector, the insurance sector, who we are trying to bring into the country, or they're already here. I mean, I'm talking about direct insurance, may not be the reinsurance players, they may have a play. So they already have offices there. So what is it that we are trying to do different in IFSC and India that will help them look at India as, or the IFSC as a good opportunity to open an office?
There are 2 things. See, one thing is a lot of India-related business is being conducted outside. Lot of India-related business is being conducted outside. Okay, so one logic is whatever India-centric business is there, it is better conducted in IFSC. You have the cost advantage, you have similar tax incentives, etc. The second part is that can you cater to a global community? It's difficult for me to respond to that, because that's when you get a critical mass, when you develop that capacity. So then when big players may look at this center, if they see worth in it, to cater to the region. I think India is a compelling option. Now, whether it is able to get that, translate that into actual investments, it depends on many things. So, answering your question, today several banks had set up shop in Dubai, but they were catering to India's ECB. So, sitting in Dubai or sitting in London and catering, for example, today, I'll give you an example. 8 months back, there was one Standard Chartered bank. Today, there are 8 foreign banks. Okay, there are banks from UK, there are banks from Japan, the banks coming from France. Why are they coming here? Why should these global banks come to Deutsche Bank is there? So there are, all banks are coming. They are essentially coming to deal with Indian potential, also looking at South Asia. So I'll not be, exaggerating. So they will look at India, they'll look at South Asia, then they will be looking at Southeast Asia also, they will be looking beyond that also. So it is a good opportunity, geopolitical reasons, so many reasons are there which sort of make corporates strategize how they will set themselves, how they will structure themselves. So I think there are enough indications and enough writing on the wall that India will be looked at seriously as an option. But it's not automatic. So it's an option. We are only saying it's an option. And we are open to any inputs. So suppose there are certain inputs, suppose there is something which is a impediment, then that can be looked at. So I think let's not underestimate ourselves. There is in lighter vein, India has built, they say, Dubai and Singapore, and we can perhaps also build GIFT. So a lot of Indian contribution has been there in terms of human resources, in building these financial centers. So we can do the same thing here.
Thank you, sir.
Thank you.
Any questions, sir?
Sir, I have a question for you. Yeah, sorry. So, thank you for your address, sir. And firstly, I wanted to take this opportunity to congratulate you for the wonderful set of regulations for insurance that came out in October last year. I mean, I've been practicing, I'm an insurance lawyer, and I've been looking at insurance for last 15 years. And what has come out, in fact, has been unprecedented. I mean, one could have not imagined that for India. Now, in your address, you mentioned something about embedded insurance. And that is something which can be a very interesting area for, the participants here, as far as IFSCA is concerned as well. So, do you think, within the fintech framework that you mentioned, we could also address, or we could also have some avenue for embedded insurance in IFSCA in future?
Certainly, sir. You look at that framework, I think it's unique. So it's a very, very broad-based, and it'll enable many things which can directly or indirectly also get into that fintech space. So okay. I think it should.
Okay. Thanks.